The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour here. I'm your host, Darrell Martin, here on TFNN.com. If you have any questions, feel free to call in, 877-927-6648. And also, if you're outside the U.S., call 727-445-1044. Let's take a quick look at the markets and see where things standing right now. Looks like we have the S&P up 1.2%. The Russell is small cap sort of lagging there, up 0.5%. And we got the NASDAQ and the Dow also about 1.25% there. Oil's moving up a bit. We got a 0.4% rise on oil and natural gas. And, of course, the currencies are rising 1% up pretty much across the board. Euro, dollar, pound dollar, Aussie dollar, euro yen, pound yen. And then corn and soybeans are doing a bit of a retracement back off those highs that they've been making lately. So, just checking all that out and looking at the markets. And, we had all the stuff come in last night. And with Trickett coming out and basically saying for the ECB that they're willing to do whatever it takes to stabilize the euro. So, of course, that's, been said a lot. So we'll see what that really means. But, basically investors needed some sort of reassurance with Spanish bond yields going through the roof. And basically if they bailed out Spain, they wouldn't have enough money to bail out Italy. So, still there's no details on actually delivery of what it takes. And just because they're saying they're willing to do what it takes doesn't mean that everybody's willing to do what it takes. And really, we're not going to know what they're going to be able to do until September 15th when the German Supreme Court rules whether or not it is constitutional for the German people to take on the debt liability of the less economic savvy nations. So we're going to see how that all comes out, how that plays out. But in the meantime, we're trading every day till then and when on through then, right? Tomorrow we got some big things coming up to the GDP. And that's going to be our big number of the month. So with everything that's been going on, people are going to be watching that number. Comes out at 8:30 Eastern time tomorrow. Make sure you're on your computers ready to trade and check that out. And always make sure that you limit your risk in that process. This morning, the S&P flew on up. And, of course, we had unemployment claims come in better than expected. Not good, but better than expected. And we saw, a bit of a bump up in the S&P, 4 or 5 points. And because it just wasn't that exciting, because it was still a horrible number, even though, like I said, better than expected. And, we had a couple other reports come out and had a minor impact on the market. But the big news, of course, is when Trickett came out and the market just literally flew up. And, we were looking at standard deviations. I was trading this morning, checking things out. And the market basically had flown up 2 standard deviations from yesterday. And basically right when it hit that, that's when I was looking to go short. Got a Gartley pattern short there. And went ahead and went short. I sold this box and I wrote it down to about right here where the box expired out and took a nice little profit off. And, it's really helpful when you have those standard deviations, especially when it lines up with a Gartley pattern, it lines up with, fib and other, support and resistance zones. There's a lot of confluence, a lot of saying, hey, this is a barrier, this is a wall. And basically allowed me to have confidence in taking that short position. So, if you haven't learned about the standard deviations, make sure you're definitely checking those out, using those in your trading. Doesn't matter whether you're trading the futures, whether you're trading forex, whether you're trading stock. If you're looking at things on a daily basis, you want to be looking at standard deviations to let you know where you could potentially reverse. Also, where you could look at, taking profit. So, if you're in the trade, then you'd be tightening up at one standard deviation, which was a 12-point move. And if we go over here and we look, right here on the highs, about 1357 or so. It's like 1357 is a high today on ES. And if we go in and look, and we had a 12-point, like I said, standard deviation move. So 1357 minus 12. And we got to move down to 1345, about the expected move down. If we look at it, we got right down at 1346.5. So pretty close move right there before it stopped and started moving back up. So this definitely would have been your take profit zone. When I was looking at the trade this morning, like I said, I had several things adding up to tell me to go short. And when I was trying to pick the box to, which one was I going to sell over on Nadex, I was trying to figure out what box to sell. And the box basically was like, well, based on the standard deviation move, I need one that is going to make profit at least down to 13.45. And so that's actually why I sold the 13.55 to 13.45 box spread, which allowed me to basically capitalize on the maximum expected move, and I wasn't getting more than I needed. If you have not yet done it, make sure you hop over to tfnn.com, and a couple things that you're going to want to sign up for. Well, first is hop on and make sure you grab a Nadex account, okay? Go to tfnn.com. On the right side, there'll be a banner there. Click on Nadex, and you can click Create Account. You can get a demo account for free. You have access literally in 30 seconds. So you put in your username, first name, last name, phone, email address. They'll email you a password, and you can log in. To get a live account, click Create Account, and just click the Start button. Fill the information in there. It takes you, like less than 10 minutes. And what will happen is they'll verify everything, but you'll have immediate access to the live platform, which is almost identical to the demo platform. And basically, once your account is approved, you can fund it, and they'll actually they'll actually advance money. So like if you do an e-check deposit, let's say you want to deposit $500, then they'll actually go ahead and credit your account with $250 while they're waiting on the e-check to clear. And they even raise that amount up after you've had an account for a couple of weeks. It only costs $100 to fund an account and start trading with Nadex. And so I highly recommend it. And again, while you're watching the show, having that demo account is really helpful for just following along and seeing how we're doing things and what we're doing. And, really helps to, have the practicality built in there. So, anyways, once you've done that, you can log in to Nadex. And so I'm going to go ahead and hop over here on my account, and I'm going to log in. And when you log in, when you get your demo account, they'll actually give you $25,000 of funny money to play with. And it's great for you learning just how the products work, getting used to them, and, knowing what you're going to do with that. And, we've been talking about hedge trades, and we're going to talk about that some more today as well. But, you want to get in there, you want to get used to it and how it works. Right over here, we see that, like I said, the market bounced down, it's falling back up. Really don't expect much of a big movement out of this range right now. Now we're waiting on earnings to come out after the close here. And, we have several big companies coming out. Facebook, we're about to see, they're going to have their big debut. And either they're going to rock it or they're going to bomb it. So everybody's looking to see not only, what do they report, did they meet the profit expectations? They know that there's going to be a revenue shortfall just because all the bonuses they paid out with the IPO launch. They'll back that out. They'll look at the actual profit. And then they're really going to be looking towards Zuckerberg to see what does he have to say on the conference call. What does he have to say about Facebook and what's going to be going on with that? What are his plans for the number one thing that they're looking for is what are his plans going to be regarding how they're going to start capitalizing on the mobile platform, because they make basically almost all their money comes from people on the PC-based platform, and a ton of people obviously are on there. I probably access my own Facebook account maybe 1 out of 20 times on my computer. So and it's really interesting. People spend more time on Facebook than any other website on the planet, and obviously they're going to spend a lot of that time on their mobile account. And so they definitely need to be taking advantage of that. If they can hint towards that and how they're going to do that, that could be good. They're also talking about a want button. That's the new rumor. And basically of things that they're looking to buy and stuff like that, and putting in like a PayPal-type merchant system. And rolling that out over the next several years. So we'll see if he releases any details about that, get investors excited, and see if he can sort of get things going, and if he offers any forward guidance or not on the company. But again, that comes out after the market closed today, so that'd definitely be the one to watch. Big number to watch tomorrow is going to be GDP, and that, like I said, that's going to rock the market one way or another, so you want to be ready for that. So let's go ahead, and we got several markets moving, and let's check out some of the currencies and what's going on with them. And I'll pull up some charts over here, and we'll look at them. And if you have anything over in the Tigers Den, you got some questions, let me know. And again, feel free to call in, and I can help answer any questions. And one of the things we want to look at is we got corn is backing off from the highs, and we were really talking about how big of a deal it was, because it's been making that, but it hasn't backed off completely. It really can't back off because there's just a lack of supply with everything that's been going on. So if we go in and we're going to check out corn and look at it right now, and you can see we made this high over here of 800 recently, and if we go back to the daily bars, literally round numbers are huge, right? So that's one of the things that you learn in trading pretty quick, is that the round numbers, the zeros on the end there, are big numbers to watch for potential reversal places. So we had a reversal, came down, wasn't able to really hold it, and has really been staying on top of this moving average that we have up on here. And, it's going to be interesting to see how corn does play out over the coming months. The Ag Department actually put out a warning to consumers saying, watch out for price gouging. Because, right now they're worried about people going in at, stores trying to say, oh, well, corn's went up and so everything else is getting expensive. And they're saying there's really no reason for any of that to be coming up here at all in, the next, month or two. But we ought to be, they did warn that there will be serious price increases taking place later in the year. And, be ready for that. We could see easily, anywhere from a 10 to, 30% increase in the price of meat. And, so you got to just, make sure you're aware that, that cost is coming, and you may want to hedge yourself on that end as well. But if we go down to corn, like I said, we had the big drop down. It pulled back up. It could not hold that. And it'll be interesting to see how we play that and what we can do on Nadex to take advantage of it. So let's go ahead and check out the Nadex platform and pull it up. And, if you haven't got the Nadex account, grab that. And you can look at the binaries and you can look at the spreads. And if you want to do the spreads and you want to do what's called a hedge, then you can buy the corn and you can sell the spread, or you can sell the corn and buy the spread. Or you can just do the spread outright. And the reason I like doing both combined is usually my risk is lower and I have no cap on my profit. But I'm very big on wanting to use something to hedge myself, and it comes out a lot better to use Nadex, as I've compared them to CBOE options, and they really have not panned out near as well as far as the protection due to Delta, due to all the extra premium, due to having multiple days till expiration. So all the things that go with that. With Nadex, they're going to be same day expiration or next day expiration. If they start as early as 6 o'clock and they go to 4:15 the following day, and there'll be constant new spreads popping up that you can take advantage of throughout the day. Literally every hour, 3 new spreads pop up, and what they do is they place them like right where the market's at when they open. So about 10, 15 minutes before the market opens, they're going to actually place 3 spreads. And let's say the spread's going to be 10 points wide. They'll put one 10 points above where the market's at, one 10 points below where the market's at. So the one 10 points above you can buy, right? The one 10 points below you can sell. And then they'll have one straddling it, so that way if the market moves up or down, you can take advantage of that. And one of the things I've been looking at for, if you're interested and you like to scalp, you like to do shorter term plays, is you could even go in and for less margin and defined risk, you could actually go in and you could actually do the middle spread and use that spread as your choice in trading. And so if we go here to Nadex, we can go over to commodities and pull up bull spreads. We can also go to commodities and pull up binaries. And we can check out corn and see what's available and look at it right now. And it'll be trading until 3 o'clock Eastern time today. Basically, it trades in line with the pit down there. And so we're going to pull up some spreads. We're going to check them out and see what possibilities are available for you to trade this volatile, wild instrument going on right now with the corn. All right, we'll be right back after the commercial break. Hold it right there, and we'll pull it up.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit tfnn.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour. And we're pulling up Cornish, sort of checking it out, how it's moving, and some potential trades that you could be making here. And what I want to do is pull up the binaries and sort of show you how they work. Basically, they're a $100 trade per binary. And you can go in and you can say that you believe that the S&P is going to be moving down to below 780, okay, before 3 o'clock Eastern time. So if you want to make that trade, you'd go in and you could sell this binary right here, the 780 binary, and your risk on the trade would be approximately $24.50. So you could do, 10 of them if you wanted to, and you can put it in there to be able to, take some profit, and you have a good risk-reward ratio there. You could make $755, risking $245 on the trade. So that, of course, would be pushing down on the lows, and but the market is trending down over here, and we're seeing that continued pattern for the day right now. So we go ahead and we put that trade in, and let's see here, we'll update it, and then we just simply hit place order. Now that order will go in, our position's filled instantly. There we go, and we got it in. And now what we can do also is we can go in and say, you know what, if it hits 780, it's going to be priced right around $50. So we go in and we can say, I want to take off half when it gets to that price point. So if it gets down to that and we're able to buy it back for, we'll say $50, then now we have a take profit order that'll be standing in there for us. And let's hit close, and now I'll be able to see under my working orders. I'm going to maximize the screen and pull this down. Let's see here. Then pull, there we go, the working orders. So now I can see my pending working order showing where I could potentially take profit, and that order is working for me, so whether or not I'm monitoring it, it's there to take advantage of it. And, you can also go in and you could even tier these in and put in different prices based on what you think is going to happen as the market gets more volatile. There can be a lot of dramatic moves, especially on corn near the end of the day. And it can move fast, so you got to be careful when you're trading it. But if we go over here and we check this out, just looking at yesterday's market right here and seeing how it moved. Let's see, we'll back up a little bit on it. And so we got yesterday's market when it was closing right there, and you can see how big of a move it made. It sort of trended down, did a pullback, and then trended back down, and then just, dropped. And so that's sort of what you're looking at taking advantage of, is that, potential drop right there at the end of the day. And so we are poised and set and ready to take advantage of that if it does happen. And we've also limited our risk in that process. So you can trade them like this. There's a lot of different ways you can trade them. You could also look at pulling up some, markets for tomorrow. And when the GDP comes up, of course, obviously you wouldn't be necessarily looking at corn for GDP, but you could be going over and you could be looking at the indices, or you could be looking at the currencies. So if you want to look at the indices, you can go in here, and there'll be a couple things going on. But one of those is, like I said, the GDP tomorrow morning, and you can go in and you can place trades. There'll be a variety of spreads coming out, and there'll be one that will be there'll be a 8 to 10 o'clock spread. So that would probably be the short-term spread that you could trade that had the lowest amount of premium built in, because it is a shorter time spread. And if you pull up 8 to 4:15, just to give you an example, this will also be available for you for trading in the morning. Or you can go to the daily. The advantage over the daily here, the 400-point wide daily versus the 300-point wide daily, is they're wider. All right? These actually started trading at 6 o'clock yesterday. All right? And so the longer it is until expiration, the wider the box will be. And with that, you actually have the potential to make more money. So if they're very close in price, a lot of times you'll have the same floor or ceiling. And if you have the same floor or ceiling, you may have the exact same risk. Exact same expiration time, because they both expire at 4:15. So if we go and click these on, see how they expire at 4:15. So you always want to be comparing, if you're looking at these, if you're looking at the 300 versus the 400, always check the 400 out first before you place your trade on the 300 to see if there's a better trading opportunity available for you. And, getting in the demo account, you're going to see, different bid offer sizes here, and that'll be reflected because there's people, basically placing demo trades. Whereas if you're in a live account, I'll pull that up and I'll show you, it can actually appear a little bit differently, because you have the real orders in there versus people placing, the demo trades, which, basically they're making a market. So, let me pull that up. I'll show you exactly what I mean on that. And you'll see that, the bid and offer can, definitely be a bit different on the sizes there. And like I said, you can open a demo account for free. You can open a live account for $100. But as soon as you actually apply to open a live account, you actually can log in and see the prices and everything else as they line up. And right there, we're looking at the 400s. And you'll notice right here, I don't know if you noticed a minute ago, but like the bid size over here on the demo was 3, where it was 50 over on the live account. Okay? Like right now it's 47. Right here it's 50 on the live account. So there's actually, a larger size showing available here in the live than there is in the demo. So you want to make sure you want to have that live account so you can compare apples to apples. Don't base everything just on this. All right, when we come back, we'll look at some ways to hedge, and we're going to look at a different indice today. We'll be checking out the Russell, and we'll also be checking out the Dow. See you right after the break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome back to the Diagnostic Trading Hour. And here we are. We're going to check out a few of the indices and how to possibly do hedges on them. And so we have the S&P 500 set up right here. We also got the Russell 2000, and we have the Dow. All right, so all these are set up. It looks like the Russell's actually having a pretty rough day. It ran up there this morning early, and it's really just been trending down pretty much all day long. Whereas you got the Dow and the S&P trying to do a little bit of a retracement back up here, and the S&P is pushing right near its highs. So that actually does set it up for a decent trade. Just getting close to that level. But as you can see, we do have a major support resistance here that it's been playing off of right here in this 1354 area. And bounced right off 1348 over there, and it's just been playing with that number all day. So what we want to do a hedge is we want to find a trade and a direction that we want to trade, how we want to do it and how we want to play it, and we want to figure out how can we reduce our risk. All right, that's the whole goal, is reduce your risk with the hedge, and ideally maximize your leverage, so that way you have the ability to not cap your profit, and that's the advantage of the hedge over simply doing an outright spread. Is if you combine the spreads with the underlying market, then there's no cap on how much you can make, but there is a hedge to cover how much you can lose. And not only that, but it reduces your loss versus having a stop loss. You won't get stopped out of the trade simply because the market goes several points against you. And so what we want to do, like I said, is pull that up and check out what spreads are available on Nadex. And so we're going to go here and we're going to look at the Russell 2000. And one of the quick ways, if you got a bunch of stuff open, click the refresh button, and it'll shrink everything on that for you on the Nadex platform. So go over here to Indices Bull Spreads. We'll check out the U.S. Small Cap 2000. The underlying marker for that is the Russell. And we want to see basically where is the Russell currently trading. So let's see here. We got the Dow up. Let's pull the Russell up. It looks like it's said it's having a pretty rough day. And I'll pull that chart right up on the screen. And there we go. And that should be appearing there now. And, so if we're looking, let's say we want to go short, a little bit nervous because it sort of got down here, stopped, and we're not quite sure if it's going to keep going or reverse on us. And so we want to, like I said, limit our risk. And so now that we see the Russell's trading right around 770 there, then we're going to go, okay, well, what is available in the spreads for me to be able to find, a good trade that's going to give me adequate protection, and, ideally through the end of the day, it gives me more time. And so I can see, right away there's a few trades available, but again, we want to narrow that down as quickly as we can because time is money when you're trading. And so again, we got 770, and we got a 780 here. That's 10 points away. I don't really like that one so much. I want one as close as I can get it. 765 is decent. And let's see here, we got 750, 765. So 765 wouldn't be so bad. That'd be actually a hedge all the way up to 795. And we can even go a little tighter on this and see what we got. All right, there's a 770. So that gives me actually a 7-point hedge. And what would my risk be on the trade? Risk would actually be pretty light. So we'd go in, and I'm going to open up a DOM trader over here. And so we can check this out and just play through the scenario, see how it works out. All right, so we got the Russell up on the DOM, and we got the 770, 777. And we have till 3 o'clock, so 3 o'clock Eastern time for the trade to profit. And on the trade, what we'd actually be looking to do is figure out, what's going to be best. So if we're going to go ahead and what we do is we'd sell the Russell, so at the current market price here, and we get in that trade. So we go short one contract on the Russell, and we'd buy 10 spreads. Okay, so I'm going to go ahead and buy 10, put my order in there, hit place order. And now I got an order in to buy 10 spreads, and got filled on that one. So that way I have the ability to go in and take advantage of that. And let's see, we can see that now under our open positions. Okay, so we have our 10 spreads hedging us. So now what's our risk on this trade should the Russell move up? All right. Well, what we got to do is we got to take in what's the price we got in on the spread versus what is the price we got in on the Russell. So on this, what we do is we simply pull up a calculator and just what's the difference. So if we got in at 770.5, okay, minus where we bought, 772.1. So that's 1.6, points, which would be basically 16 ticks, which is $160 risk on the trade. So that's basically just moving 1.6 points against us. What does it do for us though? Okay, so now we know what our risk is. It's $160. How's it going to be able to help me out? Well, the way it's going to be able to help me out is this hedge is going to give me, like I said, protection until 3 o'clock up to 777. All right? So if we go here and what I like to do is I like to draw a rectangle box on the chart and simply go over to your drawing tools. On whatever charting platform you use, you ought to be able to have some sort of drawing tool. And you go in here and choose rectangle. And then just, put one on there. And then edit the rectangle to match the dimensions of the box. So the box is going to expire at 3 o'clock. So we'll want to go ahead and put that on there, but make sure it matches your time zone. So I'm in Texas here. So time zone would be 2 o'clock for expiration. And then what we want to do also is we want to make sure that we put the correct floor and ceiling on the trade. So the floor on the ceiling on this trade that we just put on gives us a hedge again up to 777. And the floor of the trade is down at 770. And so when I hit apply on that, it'll update my box for me, and it'll actually reflect it on the screen, so that way I can monitor my position and have that in place. And again, I have very small risk, so $160 risk, that's a 1.6 move, but I have a hedge all the way up to 777. So since I bought this at 772.1, then what I'm getting for 1.6 points, I'm actually getting basically a 5-point stop loss, right? So the market actually can go up. Actually, I'm getting a 7-point stop loss. So since I got in at 770 over here, the market can go up to 777. So that's a 7 points, which would be $700 stop loss for only $160 cost. Okay? So you're already using stops. You're already using stop losses. But what if you could have your stop loss be hit, meaning you don't lose any more money, but you don't have to stop trading, meaning you don't have to get out of the trade. Well, what's the benefit of not having to get out of the trade? Well, you have time to be right. So now I actually have until 2 o'clock for this position to move in my direction. At the same time, I've capped my risk, and this comes out to a great advantage. So that way, if the market does spike up maybe 2 or 3 points, maybe it comes up here back up to this little zone like it's done before, 774, I can stay in the trade without increasing my risk. Whereas if I get out of the trade because I have a stop loss in place, then to get back in to have the potential to actually make more money, I would actually have to go in and place another trade and put more capital at risk. So, with this, why did we choose 10? Okay? Well, the reason we chose 10 is every tick on the Russell is worth $10. All right? And every tick on the small cap 2000 on the spreads on Nadex is worth $1. So to make it basically tick for tick, or a $1 for $1 move, right, like 772 to 773, to make that $1 move equal, I need the ticks on Nadex to equal the ticks on the Russell 2000 futures. So I need 10 of them. So $1 times 10, $10. Now every tick equals $10. And what that'll do is it'll make $10 when the Russell loses $10. Okay, so if it goes up and it makes $500, the Russell loses $500. So it hedges me. Okay? Now, the way it works in your favor is it stops losing under the floor, 770. So when it goes below 770, it gets down to that maximum loss point, it stops losing, and now the future can keep making money. And so by limiting my risk by using the spread, I'm able to actually go in and have more time to be right, get a stop loss for a fraction of the cost, and actually allow the market to go against me further and not increase my risk. As far as my net risk will actually not increase because of the money I'm making on one side versus the money I'm losing on the other side being hedged. And that's how it works on the Russell. So pretty simple. And you can do the same thing on the Dow, the S&P 500. You can do the same thing on the NASDAQ. You do 5 on the S&P 500 because every point's been worth 50. Same thing on the Dow and the NASDAQ. And that's literally just how they work. So other trades that you can look at metals and oils and things like that. And you can go in oil, natural gas. You can do gold, silver, copper. You can do it on Forex. And on Forex, it's a little late in the day for Forex usually, this time of day. But on Forex, you can go in and you can do basically one spread to one mini lot. Okay? And you want to do it on USD-based pairs because Nadex obviously is ticking in dollars. So if you go in and try to trade a yen-based pair, you're going to have an FX conversion issue. And what that's going to do is that's going to throw off your hedge. So you want to do the USD-based pairs for the hedges. Now, if you want to trade on Nadex and you want to trade pound yen, you can trade that on Nadex. It's just you want to understand that you can't necessarily hedge on the non-USD-based pairs. That also goes for the indices like the Nikkei, the FTSE, the DAX. Those 3 indices obviously are not traded in USD, so you can't hedge with them, but you can use the spreads to limit your risk and maximize your profit potential. Now, one of the strategies that I was talking about earlier was the ability to go in and place a trade with limited risk and really trying to figure out how to get rid of the issue of premium, because a lot of people come in, they're like, well, I don't want to pay the premium, associated with options, all the stuff that goes with that. And so if you want to go in and do that and you check out how the spread right in the middle is trading pretty much on par. And so what would one of those cost? One of those would cost, if you go in and do one of them, then you only have to put up be $40 if you're buying, so you're selling it, $30 loss, $40 profit. So basically you can set up a 1-to-1 risk-reward ratio without having, all the extra headache there of the premium and having to deal with that. That'd be a $300 stop loss. So that'd be like a 3-point stop loss with a 4-point profit target. Now, it doesn't mean that you have to wait and take all $300, stop. I mean, you don't have to risk the $300. You can get out before then. Or you can leave it on and give it time to come back and be right. But if you'll trade those middle spreads that are in line with where the market's at, you actually put up less money than you would if you're actually trading the underlying market, meaning the day trading margin required for a futures contract, you can actually put up less money trading those spreads like that and also have defined risk and have time to be right without having the premium issue to deal with. And I know that's a big thing. We've talked to a lot of people. We've had some good conversations over in the Tigers Den about that and comparing them to CBOE options and everything else. And It's basically like, the middle spread is sort of like called a deep in the money, if you wanted to. And just a way for you to really lower your risk as far as premium goes. So, where the other ones, the advantage is, you don't have you have more premium, but you have less risk because the trade is less, but it has to move further. So this doesn't have to really move at all, and it can start making money. And so definitely make sure you're checking that out as one of the potential strategies you can take advantage of. Now, we're talking about tomorrow with the GDP. And one of the websites I like to go to, you may want to check out if you haven't already. It's a great website. It's forexfactory.com. It's free. And you go in and you can see different things that are going on in the market, government announcements from all over the world. And so if I go in here and I check out tomorrow, and let's see here. Let's get rid of this. We got all of them. Okay, good. All right, so we can check out tomorrow what's coming up. And what we'll see here is that we have the advanced GDP showing. And, there's also going to be a revised University of Michigan Consumer Sentiment number. Let me change the time zone here. I got it over on Hawaii time. And know what I'm thinking about, right? So, a little vacation there. And but pulling that up and pulling up the calendar, go down and now we can check this out. Another big important number coming out that you may want to check out that you can trade currencies on tomorrow morning, okay? So you could look at trading the euro dollar on this announcement tomorrow is you got this Spanish unemployment rate. So they're at 24.7% is the expected number in Spain right now for unemployment. So, that's the number to watch. That'd be the number I'd be looking at. There's a couple other things. You got the KOF economic barometer, and you have, the German unemployment, the CPI numbers coming out and all that stuff. But the big number in Europe tomorrow morning is going to be the Spanish unemployment number coming out at 2 a.m. Central, 3 a.m. Eastern time. The big number, of course, in the U.S. being the GDP, and then we'll have a consumer sentiment number. After that, things are probably going to get really quiet. But this would be your currency. So you're going to say, what would be best? Aussie dollar, pound dollar, euro dollar? I would think euro dollar. So we can actually go over here. We can check this out. We can click on Open Detail and see if they have any details on it. This one, they don't have a history on it yet. On ones that they do have a history on, such as, say, the advanced GDP, then you can go and they have what's called a seismic quake index. And you can actually see what the impact is on what currency pair based on that. So on the GDP, if we go and look at the history, what currency pair gets rocked most when the GDP number is released? So when the GDP number is released, let's see here, we got euro dollar and US yen, US franc, but right here, euro dollar definitely being the US yen and euro dollar being the leading currency pairs. So we can go, we want to check a history. You want to see over the past several ones, do we see that consistent thing there? Let's see, euro dollar pretty high, US Canadian. So euro dollar didn't have as big of an impact as actually one of the lower impacts previously. And I'll usually go back and I'll check out maybe like the last 5 and see, okay, euro dollar was pretty high along with pound dollar. And, overall, it's like euro dollar obviously would be a good potential FX trade during that time. It does get moved by the GDP announcement when it comes out. So, that seismic quake index, don't get too caught up in all the details. Just know that it basically is letting you know the bigger the number, the more movement that happens based on that currency pair, based on that news announcement. When we come back, we'll talk about several trade setups you can do for the GDP tomorrow morning. So hold on right there. We'll be right back after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And looks like our corn trade is definitely picking up some steam. And so you can hold it there, you can close it out, you can do whatever you want. And it's definitely moving down, though. So if you wanted to, you could literally close out half right now. We're pretty close to that mark, depending upon whether or not you want to wait on it, what you want to do. But it's like I said, it is moving down. And to close the trade out, it's pretty simple. We have a working order, right? So we can pull our working order up. We have that as sitting like right at 50, and you could wait on that, or you could literally just go in and you could edit the order if you wanted to. So I'll just sort of show you some examples here. So let's say we wanted to close it out, and we're at 10 right here, and we said, okay, I want to get out of the trade now. And I am buying it back, so I would actually just update the price, okay, to what price I'm willing to buy it back at. And then once I've updated the price I'm willing to buy it back at, then I hit amend order on the trade and lock in the profit here. So it's like it moved a little bit on me, so I go back in, and I can edit it again. So put it in. Like I said, they're very volatile, so that's one of the great things about binders. There we go, we got filled. Okay. So locked in a $200 profit on that side of the trade. So not bad for, short time frame there. And that was just trading a binary. Just in, out. We had a couple $100 risk and made a couple $100 on the trade. And we have our Russell trade on still going. And so let's look at that real quick. And then I'll wrap up with some potential GDP plays. And let's see, what the Russell's up 60. Spread's down about 90. And it was up a little bit before. We were about $10, $20 ahead So just as it moves, we'll monitor that position. So you can definitely check that out, monitor on your own side there. And then one thing to think about is, again, we got GDP tomorrow. What can you do? Several trade setups you can do. One, you could go in and you could buy a spread, or you could sell a spread if you're expecting the market to go down, and you could buy and sell a spread. Okay, you could do a straddle. So if you bought and sold the spread on that straddle there, then if the market went up or down, basically if they beat GDP, then of course the market would fly up. If they don't hit GDP, the market's going to fly down. So you should expect a big move either way. So definitely look at the potential of doing a straddle on the spreads, buying the upper spread, selling the lower spread. And the example, just to give you one on here, so we go in and we check out US 500, and we're looking at, let's just say like this spread right here. We'll pull one up. Then what you do is you'd buy this one and you'd sell this one. Okay? And if you want to open two tickets, I believe there's a section over here where you can go into settings, and you can change your preferences to allow it to have multiple tickets open. So as long as we get that setting there and we hit that set preference to save it, and then now I can go over here, and like I said, I could buy this one and sell this one, have those side by side, and place both orders. And that would allow me to basically make money up or down as long as I cover the total risk there. So basically, like, this would be a 4-point move required. Up or down, I'd be break even at that point. And then really 2 points up or down. But yeah, I'd be break even, and then I could capture a profit. The one other option is, like I said, you could hedge. So buy the S&P 500, sell 5 spreads, sell the S&P 500, buy 5 spreads, straddle it, or you could actually sell 10 spreads and buy the S&P 500. If it goes down, you make money. If it flies up, the S&P can cover the cost also on the loss on the spreads. So with no cap. So any of those combinations you can take advantage of. Play with it. Get the demo account. Try it out. Again, that announcement's coming out at 8:30 Eastern Time tomorrow morning. Hope you all enjoyed the show, and I will see you back tomorrow morning. We'll wrap up and look at that trade and see how it turned out. See you tomorrow.